Good morning, everyone, and welcome to the European crossover webinar. And we've seen the, let me go and take a look, catch something real quick in here. Move this out of the way. Let me just open up something real quick. We've seen the dollar yen really take off here, really making a trek almost all the way to 112 here. Let me just one moment. And what a move it has made. Let's go right in here. We've actually just jumped just above this area here. Let's pull this back. Right there. Pretty key area here. Comes in right there at 1187. Very key area. We're just trying to push up above here. I myself had taken a short, but I got stopped out. At 1182. Wasn't too much of a short, but I did get stopped out here, and we've really pushed this thing for all it's worth. I was talking about this key daily level here, 1136, and when you look here at the 2 hour, we kept talking about this from the prior week of this. Once it got above 111, we can make a trek for either 1135, which would be the daily, or 1144 on the 2 hour chart. Well, we kind of paused here on the 2 hour chart, and then we took off and made another run right in here to just past this 161% of this recent range, and we've still gone and pushed back. Like I said, this thing really looks like it wants to go on and move higher. And when we look over this on the daily chart, how this market had held and not wanted to come back, and we kept seeing those moves above 111 and then a quick sell-off, a move back up and a quick sell-off, and now it looks like it really pushing. Obviously has a lot to do with yields here, and we are just clipping along right here. It's just like a big move, but we have some pretty good resistance here, as I mentioned here on the daily. Up here at 1188. It's actually, I think I had that marked off as 1187. Well, let's see if we might just ease back a bit to get past today. We have seen a rebound also here in the cash dollar index. That certainly pushed things along. We came right up in here into this 96.40, right in almost there at the 38% of this range. And the euro continues to go on in slump. As it has just simply not been able to get past the key 1392 area. And I would have thought we would have come in here somewhere in the 14s. And we talked about here, that's why we had the resistance all the way up in here in 1445, because any pushes up in here really didn't mean anything until we could get some kind of a sustaining power, and simply have not been able to do it. But look how key the 1392 area has really kept this market in check here. and also another market that we've been concerned about and we warned about, which has been on the gold market, and we have gone and slid back here in gold. And we'd mentioned that I could see this market slide back to 1293 rather quickly, and we've done just that. We've been just sliding back here with gold, and one of the things that we point out to is there just has not been the opportunity for value buying. And why we'd mention is that we'd make these runs and we're thinking, okay, it's going to come back in here. It wouldn't come back. It just turn up, move higher, and even the pullback was just nary a bit here from the 1323 to 1304, and quickly moved back up. And so we got to a point where there just was no value buying, so the stops were probably going to be very close, and obviously with the dollar working higher, it's pushed on some additional pressure. So we could quickly make a move down here, as I believe, all the way down here to 1293 without too much trouble with some stops. Cable's still holding up very well up in here. So let's go on and move on to the news, and then we'll get ahead into the analysis. So in the morning bid, back to normal. ECB too late. A Reuters poll of ECB watchers released this morning sets out the current tension in the bank's policymaking. Economists firmly expect the European Central Bank will delay hiking interest rates from the record lows until next year and will soon relaunch its offer of long-term loans to banks. Yet over 60% of them also predict there will be no change at its March policy meeting to current guidance, meaning that setting the scene for a hike in rates late this year, supposedly starting the long haul back for a more normal monetary policy after the post-crisis years. With the evidence of a global slowdown now underway and the U.S. Fed now in wait-and-see mode, the question is whether ECB Chief Mario Draghi has left it too late in this cycle to start the normalization. The United States overnight laid its objectives for a post-Brexit trade deal with the United Kingdom, and any hope, excuse me, any hope that it will give Britain an easy ride look pretty forlorn. The Washington is seeking to entirely eliminate or reduce the barriers for U.S. farm products and secure duty-free access for industrial goods. This is all part of Donald Trump's mission to demand better terms of trade across the world, saying poor deals that cost the United States millions of jobs. Forget any talk of a special relationship. Britain will not be spared from that push. Another weekend ahead, another election in Europe where the main focus is now on how many votes far-right upstarts will secure. This time, it's Estonia with the Baltics, and the party is the anti-immigrant EKRE movement, Mart Helm, currently polling around 18%. Now, as far as markets, wow, there's quite a bit of decent news of their world shares are flatlining today, the first day of March, but shares in Europe and the United States look set for a stronger open, and Asia has enjoyed some robust gains. First off, Chinese mainland shares got a reason to cheer, rising more than 2%, as it said it would quadruple the weighting of mainland shares, but its global benchmarks later this year. This could draw more than 80 billion of fresh foreign inflows, but it's on the global growth front that hopes are stirring. China's PMI manufacturing for February surprised to the upside, with the index rising 1.6% from last month. That follows official Chinese PMI data, which also showed new orders expanding. Similarly, U.S. GDP came in stronger than expected yesterday, while the Chicago PMI also showed a rise in new orders. Germany's kicked off the European session, saying retail sales jumped 3.3% in January for the strongest rise since October 2016. So hopes are growing that the euro area may have turned a corner, while growth in Sweden also beat forecasts yesterday. So the wait is on for today's other cuts. USIM manufacturing, British PMIs, and Eurozone, we get employment, unemployment, and the block-wide preliminary inflation. But before we get ahead of ourselves, emerging market signals are mixed. Focus is on whether China and the United States can reach a trade deal. While President Trump warned he could walk away from the talks, his economic advisor Larry Kudlow said a deal is edging closer with talk of meeting in March between Trump and Xi. On other stock markets, the Nikkei jumped 1%, taking its cue for the weakened yen. U.S. stock futures are up almost 0.5% following Thursday's weak close. One moment. And also the Canadian dollar recoups its losses as investors buy loonies at the month end. Canadian dollar was steady against its U.S. counterpart on Thursday, reversing its earlier decline as oil prices rose and investors bought the loonie they needed at month end. This is flow driven, and this is supply of dollars needed to buy CAD, said Brad Schroeder, Director of Corporate Sales. Canada's fourth quarter GDP is due out on Friday, which can help guide expectations for next week's interest rate decision by the Bank of Canada. Canada's current account deficit widened to $15.48 billion in the fourth quarter from a revised $10.11 billion deficit in the third quarter as a sharp drop in energy prices triggered a higher deficit on trade goods. Sterling eases as investors take profits from this week's jump. The pound edged lower on Thursday after this week's run as investors book profits and assess the continued uncertainty about when Britain will exit the European Union. That has encouraged traders to slash their forecast for a no-deal Brexit, instead expect a delay beyond the official March 29th departure. Many banks have lowered their forecast for a no-deal Brexit this week, but there remains a high degree of uncertainty with options ranging from May's deal past a delay to Brexit or even a second referendum. U.S. Bank JP Morgan said on Thursday its best guess was for Britain to exit the EU on terms of the current divorce deal and an outcome which has assigned a 45% probability. While we don't want to stand in front of any sterling rally, we recognize that the move is already meaningful and euro pound is about to break below 85 level. We need more catalysts. And dollar recovers to 10-week high versus the yen as bigger yields lure investors. The dollar moved higher on Friday, hitting a 10-week high against the yen as a jump in U.S. Treasury rates sent investors seeking higher yields into the greenback. The U.S. currency managed to claw back earlier losses after the data showed U.S. gross domestic product increased a 2.6 annualized rate in the fourth quarter. While U.S. interest rates are higher than other developed economies, investors are turning to the dollar for yield. What the dollar's rebound on? Is it sentiment or yield? The answer is just about yield, said Simon Derrick. The yen was the main casualty from the dollar's rise, losing 0.5% to 11.89. The yen, along with fellow safe haven currency Swiss franc, have been supported earlier in the week, while tensions between India and Pakistan and the collapse of U.S.-North Korea talks rattled markets. It was a quiet week elsewhere, with other major currencies stuck in tight ranges. The euro slipped 1/10 to 13.60, although the Fed effectively declared in January that it was poised to ease hiking rates. Bouts of dollar selling have been short-lived. Even as the Fed's policy normalization process slows down, the dollar looks to be supported as long as the European and Japanese central banks are stuck with current policies. The Aussie dollar slightly ahead of 70.96, stabilizing after suffering sharp losses the previous day. Aussie took a hit on Thursday as a disappointing reading on Chinese manufacturing overshadowed a solid report on domestic business investment. And lastly, in regards to gold, gold prices hit a 2-week low on Friday as investors, the dollar recouped its losses on stronger than expected U.S. economic data. Commerce Department reported better than expected performance. The fourth quarter pushed GDP at 2.9% this year, just shy of the 3% annual growth target. Gold is still fundamentally supported to the longer term, despite the bearish pressures we see for it due to slight rise in bond yields and a firm dollar. Asian economic data has weakened significantly, and it continues to show that the economy has started to slow, Lou said. Also, Japanese manufacturing activity contracted in February at the fastest pace in 2.5 years as factories cut back output and shrinking domestic and export orders, a revised survey showed on Friday. So with that, let's go on and move into our analysis. And let's go and start with the euro. Well, after working off a pretty oversold readings here, when we talked about previously about the disparity between, the exponential moving averages. We've pretty much come in and done away with most of that. And we had a poor showing yesterday as the pressure remains here with the euro. We just have not been able to move at all. The only thing that is, I guess you'd consider it a bit mildly supportive if we've seen that the bund has paired back. I mean, but it's still way up here in the stratosphere, but we have paired back a bit here in the bund, meaning that obviously rates are moving a little bit higher, but we're still way up in here. So it just eased back a bit. From a longer term perspective, that might be, if it continues that way, be a little bit supportive for the euro, but the euro has not been able to do anything at this point. So let's go on and move in, as it looks like we may want to test even lower here with the euro. Support's going to come in right here at 13, right there, 1330 here. I'm not sure. I mean, unless the dollar makes another lunge up, and I'm not certain that that's necessarily going to go and happen, but it's going to be right here for the euro here, 1331. It's going to, I mean, we can easily slide back, maybe test some stops in here, but the support doesn't come in until 1331. But I have a hard, as much as weak as the euro is, I have a hard time thinking that we're going to push a whole lot lower and trigger stops all the way down to 1331. Anything's possible. The dollar's already had a pretty good recovery, but we'll go with this support here being at 1331. On the upside, well, that's pretty clear where this is for right now. It's going to be 1392. That will be the key for today's close, as we now rotate this lower. Being on at the end of the week, I'm looking at those daily closes. I think that the market will be rather shy if it gets up in here to the 1392 area. It might be a little bit. I'll tell you what. Let's take a look here on the 2-hour chart. We're not that far away, and if we do turn things around here a little bit on these lows here, we're trying to come off. Actually, it's going to be right there, 1397. 1397 on the 2-hour chart. You get past that, and then you're triggering stops above 14, and I think folks may not want to be on that side of the market. Figuring there may not be a whole lot left once you get past 14 if that was the case. Let's go and move into cable now. This market still remains firm, and when we take a look here on the 2-hour chart, because we've had such a healthy run up in here, I think we want to look on the 2-hour chart to get a better feel of what we're looking at for support. If we do go on and see a slide back, it's going to come in right here at 32.13. And that'll be for today. The buy chart support. That would actually come in, and let's take a look here on the right here with the 23%. So you can see a confluence here, the 23% confluence here with that 32.13. As far as resistance, it's going to be right here. Just a little bit higher, actually, right in here, but we'll give it just a little bit more room. $33.05. Now we'll go and move into the Aussie dollar. This is held up, but we're starting to slide back down again here with the Aussie dollar. And if we can push past this 70.90 and see what we had here, we even got past the bias chart support, which is 71.28, and testing this. Let's take a look here on the weekly. Right there at 70.85, 70.82. Support is going to come in right there at 70.80. I mean, we're just about there. Let's call it 70.80. And going back to the daily, so let me see right here, it's 71.28. And you can see it right coming right here across on the 2-hour. We can actually move this right across here at 71.32 if it could make it up there. Right there. So it's going to be 71.32 on the upside for the Aussie. And now we're going to move into the dollar Swissy. Well, this has appreciated or has really come back after testing what we had for the last few days. Remember, we were targeting 99.53 right in here on the 38% back. And we actually dipped lower initially And then this market smartly came back with the dollar. Let's take a look as far as on a fib here. We even already jumped back past the 38%. We're making a run up here to the 50%, which is par 31. And actually that resistance is going to come in right there. Well, not par 31, but par 13, I mean. And resistance is right there at par 15. Par 15. Remember, we had par 21 before. Support now on the Swissy would come in right here at 99.79. 99.79 for support. And let's go move into the dollar CAD. We do have GDP today for the dollar CAD, for the Canadian currency. And we're just looming here at this 31.52. And this market certainly looks like it wants to push lower. And well, like I said, we'll see how the data comes out today, but certainly taking its toll here. Let's go on and take a look as far as the key support, remember, is going to be, remember this weekly support it held before, this 30.89, and we're still pressing lower here. Let's take a look here on the 2-hour chart. Key support comes in right there at 31.06. call right there at 31.05 here for the dollar CAD. Resistance will be right there at 31.74. Right there. And let's go and move into the dollar peso. We got into this area here where we'd come back to the 61%. We dipped below, we rallied, and we actually came back and revisited because this was 61% of this range right in here. So found again 1911, and then we popped up and we kind of meandered for a while. We finally pushed up higher here, and obviously the dollar doing a lot better has certainly gone and helped. For right now, I'd have to go right here with this being the resistance, which is going to be 1930, or just call it 19.31. And let's go and take a look at a fib on this also. We've made it up just up here to the 61% here also. And we know how well this market's been trading against the 61%. But we have just pushed just above that 1931. Support's going to come in right there at 1922.7. And looking at the daily now, we're above this 57.18. And, you know, my thoughts, although it did pare back a bit from the 57.18, but I would have thought that rallies back up towards this area would have been faded. And we had since continued to move even higher here on the dollar CAD. Not dollar CAD, I mean the crude oil. We're back up to this 57.18. I'm just going to leave this 57.18. I mean, we're obviously above it, but can we close above it for the week? And I think that's the key, whether we can or we can't. So I'm going to go with the 57.18, which is our old resistance or target area. And we'll move into the 2-hour for support. On the 2 hour, we have it as 57.28 here. And really this close here, right there, you see this? Let me pull this back. Right here. That's 57.34. It is actually just closed just above it. Now we're starting to slide back. We'll actually use we'll use this 2 hour right here, that close right there. 57.34 is our resistance. We'll update that for the 2 hour. You know, the daily is key. It's going to be key whether they can close above 57.18, but on a very, very short-term basis, 57.34, and we'll put for the daily right there. As far as support, you can see this coming across. See right there? That's a little bit too close for comfort. Right there at 56.66 on a short-term basis. Here's where they'll try and extend, but just beyond that, it's right there at 56.19. If we go in and break past that, but you'll probably see it bounce right against this area here if we pair back. I still think it's going to be key. The key thing is going to be, can we close above 57.18? And let's go into the dollar yen. Well, this is a key area right here, 1187, right there. And let me go and mark that off here. So this be key on this 2 hour, not 2 hour, but the daily, if we can get past this 1187. It certainly looked like they were going to try to even push beyond the 112 area here. But this is a key level here. We're going to mark this up as our daily, which is 1187. Support, let's go and move into the 2-hour. Support's going to come in right there at 1165. It certainly is trying to go in and break out. Already had a pretty good run here in the cash dollar index. See if this thing can pare back a little bit from these extreme levels here. That 1187 here on the daily is key. This will be 1165 on a short-term basis. But boy, what a run this thing's already had. And let's go move into the Aussie yen. Well, this has certainly been impacted by the yen itself, for obvious reasons. But I'm just saying is we've seen a huge move in here. Not huge, I mean, compared to the dollar, but pretty big move here as we've broken beyond here. Resistance is pretty clear. It's here 79.56, but we've already had a pretty good run up here in the euro. I mean euro, but the yen here. We'll go with the solid line right here, which is going to be 79.56. We actually had that marked off a long time ago on the way back up. Remember here, and then we jumped up before it all the way on some stop run and came back in here. So it's going to be 79.56 here with the Aussie yen. Other than the initial fireworks here with the yen, I think we can pare back, and that support's going to come in right here at 79.20. I wouldn't expect this thing just to turn around and roll over or turn around and take off real high from here. I think we'll stay limited in the range, and that support's going to come in right there at 79.20. So I think it's going to be a tighter range today for this. And let's go move into the dollar index. Well, smart recovery here in the dollar index, and we had the resistance before at 96.31. The day before we had 96.40, and they actually made a trek right back up here, right up here to this 96.40. We've been tracking the dollar index using the 2-hour chart. $96.41, we just about made it to the 38%. So maybe we'll get a bit of an ease here with the cash dollar index. Support's going to come in right there, 96.15. And it defended that 95.80 very well yesterday. And resistance will be just a hair above that. It's right there, 96.43. 96.43 for the cash dollar index. And let's go move into the gold market. This is a market that, like I said, we'd been a concern with. We mentioned that, hey, this thing can go in and pair back because we said that there just hadn't been the opportunity for value buying, and the stops would be relatively close. And we're starting to see this as it's continuing to go on and pull back here. Support's going to be rather obvious, 1304, but you have to be careful. One of the things we've been warning about since early in the week is we could trigger some stops and take us all the way down to 1293. I'm thinking that maybe what if we do go on and do just that? So let's take a look at this on a 2-hour chart. We'll go with support right there, 1299, in case we hit a little bevy of stops here. Let's go with 1299. Resistance is going to come in right there at 1311. Now, this is the one thing that may be a little bit supportive of the euro, but once again, it's still way up here in the stratosphere. You look on the daily, is on the Bund. And you can see the Bund pairing back. We're starting to move a little bit lower, a little bit lower. This is the one thing that can be a little bit supportive for the euro, but really it's the dollar that's still, once again, calling the show. So where's support going to come in? Well, support comes in, strong support coming in right there at 64.96. 64.96 on the Bund. And even though the Bunds have slid back, it really hasn't offered much support because here's the euro at 13.59 right now. Even on a short-term basis here, and that's what we're going to go with the fib on here. Just got past the 50%. I mean, the 38%. We're trying to hold in this area here, so maybe try and get a bounce back. Resistance is going to come in here right at 65.50. And they'll try and make a stand here around this 38%. It'll be 65.50. And let's go move into the DAX. Well, this is a bit of a surprise here, the way we've jumped up here, and it's going in. Resistance comes in right there at 11,651, but a little bit of surprise here to see this turnaround jump up. Although we've gotten a little bit better economic data come out. We had the best German data that was since October 2016, which obviously gave it a little bit of a boost. So probably was able to go in and gun the stops here. So resistance are going to come in right there at 11,651, just a hair above where we are right now. And the support well is going to come right against these tops, which was these tops. We're going to go with 11,544 on the DAX. Well, the euro continues to slide back now. Pretty interesting to see. We're interested to see how we fare up here with the cable. There's a decent chance we can come back down here, this 32.13. Just going to keep that in mind. Gold certainly under pressure. We talked about that, those tight stops, and the possibility that this market could slide down. And certainly that's what we're doing. We're just continuing to go on and pair back here in the gold market here. But and also the big mover for today has been the dollar yen. Facing a key level here at 1187. That's on the daily. You can see that coming right across here, 1187. I'll go and get the bias chart posted, and we'll see you a little bit later on the chat room. Thanks for joining us here on the European Crossover webinar.